We are reaching the end of a momentous year, 2025. Till now, we've had a situation where the international scene changes a little up, a little down. But we have never seen these phenomenal changes that we have seen with the arrival of Mr. Donald Trump on the scene, who has absolutely smashed all earlier assumptions, both on the political and on the economic side. We have a situation today where we thought that Mr. Modi and Mr. Trump were supposed to be friends. I remember there was a big Howdy Modi meeting in the USA for the NRIs, and we got the impression that the two of them were great chums. Well, it's very clear that this is a case of, embracing in order to stab in the back. We've had a situation where the import duties on India are higher than almost any other country. I mean, we are being treated like dirt, basically. We are saying that we are a dispensable pawn. And, if you have a certain amount of problem, it is more important to try and squeeze the Russia on oil than worry about long-term relations with India. Which, so, the entire notion of India and USA getting closer, I think has been destroyed to a substance. There is no trust anymore. If you look at some of the opinion polls of just ordinary people, I think a few years ago, 77% of Indians had a favorable view of the USA. I suspect it will be down to something like 25% today. So, okay, there has been this major change in the international scene. There has been equally on the other side, China has been using rare earths as a kind of lever against anybody and everybody. The world is fracturing into new kinds of areas. So despite all these things, India has done extremely well. And this is something that certainly surprises me. It certainly surprised Anant Nageshwaran, our chief economic advisor. And perhaps, Auradeep, it surprised you too. So what would you say on this remarkable outcome?
I think it's not just India, right? I think globally, when the tariffs kicked in, people had the expectation that this is a shock, right? This is anti-globalization. I think the broad consensus was that this will hit it'll hit China, B, US's key trading partners, and also the US itself, right? So,
yes.
And I think what's really surprising at the end of the year is that everyone seems to be sort of settling in okay, right? So even in the US, it's not like inflation is still gone through the roof.
Yeah.
It's not that growth has fallen off a cliff. In fact, growth is pretty strong there. It's a little interesting that we are in a situation where even in the US, right? So you have strong growth, you have inflation that is slowly picking up, and you have the Fed cutting interest rates, right? So, even within, I think the Asian economies. So there are two things which I think are playing out. One is the actual tariffs that kicked in, right? I think it is interesting that even though India started doing the legwork earlier and a lot of other countries waited till the last minute, they've managed to bring the tariff down to around 20% or so, right? So, and the other thing is also that the definition of transshipment, so which is basically Chinese exports to the US getting rerouted through Vietnam,
Yeah,
through Indonesia. That's still going on, by the way, right? So those
yeah,
rules
I'm
have
sure.
been tightened that way. So there
Yes,
has been that, right? And I think on the top of that, there's also this whole AI and tech theme, which has been driving a lot of this investment, right? Whether that sustains or not is a different question. But I think there is a lot of interest, including I think a couple of days back we had it for India, right, with Amazon, Google, Microsoft coming in with huge amount of investments.
yes,
Um,
yes.
so that's sort of the backdrop, right, where everything looked scary to start with, and I think we've reached a kind of equilibrium of sorts where all actors, be it government, be it firms, be it the US itself, have all kind of
Right.
trying to reorient themselves.
There was panic in April when these so-called reciprocal tariffs were announced by Trump. They were extremely high. They were also completely irrational. While he called them what I mean, it had nothing to do with retaliation. They seemed to be equating a trade deficit with any country with unfair trade practices. So I mean, in terms of economics, this was balmy. And so there was this great fear. Not only was the tariff high, but there was the fear that this may lead to a trade war and equally high retaliation from the other side, which we didn't get from Europe or the other place. And even with China, I mean, what ultimately happened is this great thing called TACO, Trump always chickens out. So after having this a lot of noise, we've got to this somewhat ridiculous situation where remarks of the president of the USA are not taken seriously by anybody. It's a remarkable outcome. Earlier on, every little phrase of the president used to be analyzed threadbare. Now they say, he'll just check it out, things will be okay. So far, so good. But would you not say that this is because of two, three factors? Number one, because there was certain deadline in the future. There was a very large amount of front loading of people saying, let us do as much of our trading as possible before the deadlines come in. And because of that, the trade of many countries, even in India for some months, boomed to the USA because you wanted to get your goods there before the tariffs went up. This also meant that there was less inflation in the USA because a lot of the front-loaded stuff got into the USA before the tariffs. So this hadn't happened yet. So then the question arises, okay, TACO and the fact of front-loading. Because of this, two things. Number one, the effective tariff, instead of going up to 30, 40%, I've seen calculations of as low as 11 to 12, though other calculations seem to show about 18 to 20% is the effective rate of tariffs in the US. But be that as it may, the question is what happens in the coming year? And to me, all the things that happened, which kept down the bad news in 2025, may hit you in 2026. My friend Shankaracharya, former chief economic advisor, suggests that there is going to be a big collapse in the next financial year in India and in America. Uh, that prices will go up very significantly with the end of that front loading. And as the side effects, I mean, to begin with, there was some absorption of the tariffs by the importing American companies, but at some point they're going to pass it on. Mr. Trump's notion that this is a tax on foreign companies is truly zany. Obviously, it's a tax on American consumers. So do you, and if of course there's a collapse out there, in the US economy, it will have implications. How likely do you think this scenario is?
So I think that see this whole issue of who does this tariff hit, right? Um, we need to see it to believe it, right? I think it's a little simplistic to think that this will all come crashing onto American consumers. Yes, American consumers will face and probably are facing some of the tariff impact, but there's also going to be some absorption of margin of that,
Yes.
of those tariffs by producers also. So they will, bring in some, and then you have some passed on, some absorbed by companies in the US, and then some passed on to consumers. So it will be sort of petered out probably in that way. The question, I think, for the US is how much of that will dent consumption. And I think one of the things that has been, the nth wonder of the world has been the resilience of the US consumer. I mean, I remember when, post COVID, you had inflation go up to, if I'm not mistaken, 5% or so in like historical highs, and everyone were clutching their pearls, saying, "Oh my God, this will definitely, cause consumption to go down in the US." That didn't really play out that way. So I think overall, yes, the inflationary pressures are there. In fact, I mean, we are now going through the phase where the actual tariffs are in place. And you're absolutely right in the point which you mentioned, which is that the effective tariffs are probably much lower than what the headlines seem to suggest.
Yes.
So to that extent, even the transmission onto inflation, I think, will be adjusted accordingly. Um, I mean, our view is that U.S. growth is likely to remain, strong and stable next year. And I think the point is that, you all countries are now sort of realigning themselves to these new ground realities, right? So, you could be Vietnam, you could be Thailand, you could even be India. Like India, it's very interesting when you look at the export data industry-wise for India, right? And you see that, predictably, after the tariff hit has happened, you've seen textiles go down, you've seen leather go down, you've seen chemicals go down. In fact, even seen pharma go down, which is not, which is not under the tariffs thing. But
Mm.
what's interesting is marine products. Marine products in India have actually picked up strongly. And the story that seems to be emerging from there is that India realized that we need to diversify our markets away from the US. So there's a lot of products that are going to markets that we didn't focus on earlier.
Getting away from the impact of whatever is happening abroad, the Indian GDP figures have surprised on the upside quarter after quarter after quarter, to the point where I have to start wondering whether something is happening which is new and a cumulative effect of all the reforms that had taken place earlier. I had certainly, I mean, this 8.2% in the last quarter was amazing. I mean, this is a quarter in which the full impact of the Trumpian tariffs should have hit you. Various other fears should have hit you. And Anant Nageshwaran, CEA, had said that, maybe this will cut our GDP growth by 0.5%. Instead of that, you find this thing going at 8.2 after 7.8 in the first quarter. And you find that many people are now revising their GDP growth figures to above 7%, maybe 7.5%, when some pessimists had said, well, it will now fall to 5 or 5.5 because of the effect of the thing. When I find that again and again, you are getting surprised on the upside. Have some fundamental things happened to change our long-term trend? This is the thing that interests me most. When I see that the real problem is that I think the most important thing that has happened in India are the global capability centers, the GCCs, and they are still a black box. We don't exactly know what are the figures, what is the production, what is the investment. Right? They are all, even in terms of the so-called exports, a lot of those exports are actually salaries of the GCC workers the RBI says you have to pay them in foreign exchange and not in rupees. So it shows up as export and it comes out. But that took me area into a very major strength. This is on the one hand foreign investment. It's not the foreign investment that the government sought. It has come in entirely because India has such a large number of STEM graduates, English speaking, and there is no other place in the world that produces so much. And there is a need of them because there just are not enough in the USA or in Europe. I mean, this is such a fundamental change. For the first time, we seem to have something to offer which nobody can offer, which can be scaled up very substantially. And when you think over the spillover effects, I mean, these guys are all into R&D in a big way now. It isn't just call centers and so on. So they're doing design engineering and they're doing R&D. So all this talk about India does not spend enough on R&D. If you begin to adjust for the GCCs, I think that thing would say. Secondly, will be the spillover effects. The kind of skilling of our STEM graduates that is taking place could never have happened otherwise. So we have, a million, I don't know how many people, but getting the highly skilling, the same guys can be hired back by Indian companies. There is a two-way transfer of the staff. And by no means are all the staff going at ultra high wages. Many of them are, in fact, arts graduates being retrained. The point is there is an upskilling of a nature which we could never have done by ourselves. And it has lifted us on that particular thing to a new plane. To me, this is a source of immense long-term strength and confidence in the economy. The important thing is not whether Amazon and Microsoft are investing a particular sum of money at this point of time over 5 years. The more important thing is the fundamental thing that the whole world needs India for the STEM graduates.
And I think the problem that is coming is from the deflator, right? So because inflation has fallen so sharply, in fact, now CPI inflation is around, it was 0.3% or so the previous month. We'll get a new data for November, I think, today. So you have very ultra low deflators. And so the way, the government doesn't, this is more for the viewers, the government doesn't know how many, cups of coffee I am drinking. What it knows is the price of the revenue of coffee companies, and they divide it by the price. And that gives me the number of coffee cups that I've drunk. So I could have maybe drunk just 5 coffee cups. But if the price of coffee is judged to be very low, right, then suddenly I could be having 7 or 8 cups of coffee according to GDP. So I think there is that distortionary aspect there. I am by no means saying that growth is weak or it's compromised. There's obviously pockets of growth that are strong. I think it's important for us to appreciate that it's not 8% plus ish. We are not in a sort of positive output gap that we are doing above potential. And the problem that often economists face is, you mentioned GDP growth forecasts being upgraded, right? But here's the problem. If your first quarter,
past performance has consistently
So now if my first quarter is 7.8, my second quarter is 8.2, even if I assume a slowdown for the third and the fourth quarter, it comes to 7.5 arithmetically. Right, and I think that's where RBI is also. They were expecting close to 7%, and now they've raised it up to around 7.5%. So there is a bit of arithmetics, and there's a bit of just the way the index is constructed. I think a very important reform that India is doing. And I know this sounds boring, but I think it's very interesting, is this revamp of the GDP series, the revamp of the CPI series, and the revamp of the industrial production series, because these are all based on 2011-12 prices. A lot of the way these are calculated have come under question over the years. So, that revamp is happening next year, and it'll be very interesting to see what India's growth, inflation, etc. looks like in those new series. Now, coming to the point which you mentioned in terms of the drivers, the GCCs, I think obviously this is very important. It's important from two perspectives. One is if you look at India's um, from a current account deficit side, right? You will see that India's trade deficit has gone up, but so has services. And then when you look at the services surplus, right, you see that there is a larger and larger proportion that is coming from professional services. So earlier it used to be the IT services that would drive most of it. Now it's professional services are increasingly having a bigger share. And obviously this is in terms of skilling people. I think the concern from a so there are two concerns, I think, from a more macro perspective. One is the quality of STEM education in India, right? And I think we need to focus on the fact that we have hundreds and thousands of engineers that are getting out, and so you have the top tier institutions, right? And then hiring managers keep saying that, okay, once the top tier is gone, there is a skills gap, right? Which and you have like engineers, you have PhDs lining up for jobs of peons and just any other government job, just anything. So I think there is a gap. It's not just a jobs gap, but it's also a skills gap. And if you look at any other of the major Asian economies that have sort of broken through, right? Look at China, look at Korea. I think the human capital part of it has been an important part of the story, which I think India has to take care of. So yes, GCCs are positive, and it's certainly helping with our balance of payments. But I think there's a lot more to be done in terms of just getting ourselves on that curve. The second aspect is broader on India's labor market, right? Only 20% or so is regular workers. So one is that our labor force participation is close to 50%, which then means that roughly half of our working age population is not even they're not even searching for a job, right? So they're out of the labor force. Now, within the labor force itself, right, and within the workforce specifically, a big chunk of India still remains self-employed and casually employed, and with only a small chunk in the regular workforce. So I think the other challenge for India is formalization of the workforce and increasing the share of the regular workers. And I mean, to that extent, I think the labor reforms that the government has done so far are very important.
When I see, you were saying just now that people are saying we've done the investment and we are not getting the outcomes. I'm saying, I'm sorry, you're getting GDP growth in spades. In other words, another way of looking at it, it has worked. And when people say consumption has not grown enough, I will simply say, if consumption is growing enough for 8% growth, what the hell are you complaining about? If it's growing at 8%, how can you say investment? I mean, I keep hearing these things, that private sector is not investing enough. There is no shortage of any goods. At most, you can say that unlike Korea, we are not aiming at 10% for the simple reason that we are not an export-oriented economy like Korea had to be in order to get economies of scale. So our guys are basically focused on the domestic economy. So I say that, that we are going on a more or less okay path. And the long-term growth, if you take from 2000 onwards, of about 6.5% per year. That 6.5% per year, Anant Nageshwaran has been putting in the economic survey year after year after year. Now, even Anant is raising the question, is it possible that we are going to increase from 6.5 to 7.5? 7.5 earlier on, you waved as though being, a normal event. It's actually a very exceptional rate of growth to have for any country, and for us to have in this particular climate. I find it very exceptional that to even think in terms of 7% plus as being chalta hai.
The way India needs to look at it is not just rely on export-oriented growth, but also to look domestically. But when you're looking domestically, I think it is important then to sort of unlock the structural factors that are holding the country back, and that doesn't necessarily always have to be grandstanding reforms. It could be as simple as getting licenses in time, getting the roads fixed in time. So you are actually seeing for the post-COVID a huge amount of public investment that's happened, right? I mean, now it's a norm that central government is spending around 3% of GDP on capex. That wasn't the case before COVID. It was around 1.5%, 2% at most. So there is this strong focus which is there, which is to kind of start boosting the domestic economy side, because that is going to be the buffer when you have these external shocks that come in.
Right. I think we probably exceeded our time limit. Thank you very much.
Thanks a lot.
Yes. Bye.
It was lovely talking to you.